to the North American Association of State and Provincial Lotteries, U.S. lottery sales totaled $80.5 billion.
$80.5 billion. $80.5 billion. Well, let me tell you who they want. Whoa, what's good? What's good, everybody? What's good? Welcome back, my beautiful, beautiful people. You are now tuned in to the greatest, the best show on earth, the ShiftMakers podcast. I am your host, L, the designer, and this is episode 12 of the ShiftMakers podcast. And today, I got something very interesting for y'all. This is going to be another solo episode. We're going to go into a little bit of risk taking. We're going to talk about some risk taking today. We're going to talk about risk taking in a lot of different ways, really, right? So I kind of got a little interesting bag of clips for y'all today. It's going to really kind of help me, guide me through this conversation. And we're going to be talking about risk taking with your money today. And by that, we're going to be talking about the lottery, the stock market, and a casino. And I mean, just to give y'all a little bit of background, a little bit of knowledge on where I get my inspiration from with this topic. Over the past few days, or really over the past week now, I don't know if y'all been too caught up with just culture news and stuff like that, but Elon Musk appeared on a show called Saturday Night Live, and he was talking about Dogecoin and Bitcoin, and different things, you know, a little bit of crypto. Elon, of course, the god of Tesla, kind of made a little bit of an impact on the cryptocurrency world. Over the past 7 days, cryptocurrency has pretty much crashed. I mean, we're talking Bitcoin, we're talking about the Dogecoin, we're talking about pretty much any type of coin, Ethereum, all of them for the most part fell significantly, and they're trying to bounce back. And a lot of people is blaming that on the Tesla god, Elon Musk. And the reason people was blaming him is because every time he tweets, Elon, the crypto market swings in a positive or negative direction, depending on, of course, what he tweeted. And he was sort of kind of, I guess you could say, speaking a little bit negative on Dogecoin, and really a little bit negative on, not really Dogecoin, but on Bitcoin. And he was basically saying how his Tesla stock, Tesla, of course, is the car, the vehicle basically that he created and owns, they will be pulling all of their Bitcoin. So basically, Tesla made a large investment in Bitcoin a little bit less than a year ago. And he's saying that they're now going to take that out of the Bitcoin market solely because it's jumping up and down too much, basically meaning it's too volatile. So, yeah, that affected the Bitcoin market significantly because you had a lot of people looking at Elon like, why the hell is he pulling out his Bitcoin money? And why is he pulling out, you know, kind of from crypto? So a lot of people got scared and started panic selling because they were like, well, I mean, if a smart, you know, rich motherfucker is doing it, then I should be doing the same thing. So, you know, they kind of started selling. And then, of course, once people saw that their numbers going down regarding, of course, their investment in those stocks, they started selling. So it's kind of like a domino effect in a sense. And yeah, that basically led to a lot of people losing money in the crypto market. And again, you only lose money if you sell. If you hold, then I mean, you're just holding. But if you sell it in the crypto market, then that's when you're actually losing money. If you're in the red, of course. Now, if you're in the green, then of course you're taking profit. But yeah, just to make a long story short, everybody was all up in arms at Elon, blaming them for their losses, like he told them to sell or like he told them to make the initial investment. But you know, they're not really taking heed of their part in the blame. Like, you know, you took the risk, so you need to accept what comes with it. And that's kind of what we're going to be talking about today, of course, risk taking. And being a little bit disciplined with your risk taking while also being a little bit of a visionary with your risk taking, because it is very, very, very important to have a balance of both. So to start things off, I got my first clip of the day is actually going to be coming from this YouTube channel called Stay Tuned. I believe it's from NBC or something like that. And they going to actually be talking to us and telling us how does the lottery actually work, right? So before we go into this, I want y'all to actually consider and think, have you ever tried the lottery? Have your mama tried the lottery? Have your auntie, your grandma, your uncles, anybody you know tried the lottery or got some scratch-offs? All of it's the same shit. You know, have y'all ever took part in such thing? And basically, how do you feel about it? Do you feel it's a quote unquote stupid people's tax, or do you feel like it's actually some hope in the lottery? So be thinking about that as we go into our first clip of the day.
Fortune, fame,
Show me the money.
paying off your student loans.
Money, please.
Winning the lottery changes people's lives. From
Change.
picking the right number to accepting winnings like this. Things can get kind of crazy and it may seem too good to be true. So, how does the lottery actually work? What's up, guys? I'm Lawrence Jackson with NBC News. So when you think about the lottery, you probably think of this.
166 million.
$1 billion.
Let's find out three.
But lotteries have been around for a long time, like as in the Bible talks about them, and Roman emperors use them for entertainment. And
Long ass time they've been fucking over people. Long ass time.
That's true.
now for my favorite part of the lottery, the scratch-offs. Back in the colonial US, lotteries were used to raise money for public projects, like paving streets. The Continental Congress even tried to use a lottery to help fund the Revolutionary War.
So basically, the lottery started as a way for the government to tax people. It's basically an additional tax. It started as a way for the government to raise money for, of course, whatever they're trying to do regarding, as he was just naming, like wars, fixing streets, you know, whatever needs to be done within, say, the city or the state or whatever area you live in. That's what part of the lottery took care of. So it was kind of an additional way of receiving funds for the government, in a sense.
Big money. But lotteries started to go out of fashion in the late 1800s. People were worried about the rise of gambling and the corruption associated with lotteries. The Louisiana lottery, known as the Octopus because it shipped tickets across the country for people to play, was filled with crooked practices like bribing government officials. So states
Of course, that shit will come from Louisiana.
banned lotteries, and the federal government stopped lottery tickets from being shipped across state lines. And that pretty much put an end to this in the US for a while.
Shut it down.
Then in 1964, lotteries made a comeback.
I'm back, baby!
New Hampshire established a state-run lottery with the profits going to education. A bunch of states were like, sounds like a good idea. Now 44 states have lotteries here in the US. And we have big multi-state lotteries like the Powerball and Mega Millions making insane jackpots. Still broke. According to the North American Association of State and Provincial Lotteries, U.S. lottery sales totaled $80.5 billion.
80.5 billion. 80.5 billion.
2016, yeah, billion. $30, that's it.
In 1 year. 1 year.
And all that money comes just from ticket sales. So where does it all go? Well, it depends on where and what you're playing. Let's use Powerball, for example.
So before he go even further, just think about this. $80.5 billion, I believe he said in 2016, was raised by the lottery, right? Or the Powerball, whichever one he said. 80.5 billion. The biggest lottery amount I think I ever seen was like 1 billion. So take that into consideration. They getting 80 times what they giving out. Wow! If that ain't a stupid people tax, I don't know what is.
Well, so a Powerball ticket costs $2. According to Powerball.com, 50% goes to the giant prizes. 35% goes to, quote, the good causes supported by lotteries like scholarships and education. 6% goes to the places that sell the tickets, like, say, your average gas station. And 9% is used to help keep the lottery running. So that equals 100, right? Okay, now let's talk about the fun stuff, like how you can win a bunch of money. Cash money! Say you got some tickets like these, and maybe like me, you're imagining riches beyond your wildest dreams. But how likely is it that you've got the winning ticket? Well, state lotteries have the worst odds of any common form of gambling, so don't get your hopes up. According to Professor Liberty Vittert, a statistician from Washington University in St. Louis, the odds totally depend on the game you're playing. If you're trying to hit the Mega Millions jackpot, you're looking at odds about 1 in 302 million. Or you just...
1 in 302 million, bro. Y'all know there's about 350 million people in America. So that goes to show you, you have the odds of being one out of almost every American of winning the lottery. 1 out of over 300 million, bro. Craziness.
Hey, let's play the Powerball. The odds for that jackpot are 1 in 292 million. The most common numbers drawn in the Mega Millions, according to lottonumbers.com, are 31, 2, and 17. For the Powerball, it's 26, 41, and 28. But it's all chance. The only way Professor Vittert says you can really guarantee a win is to buy 292 million Powerball tickets. One of them is guaranteed to win, right? But that would cost $584 million, which is probably more than what you'd actually take home from the jackpot. This one right here, one feels like a winner. But if I actually did win, what would I do? Well, according to the lead director of the Mega Millions group, the first thing you should do is sign that winning ticket. That ticket could be anybody's if you don't put your name on it. Second,
don't let them steal your shit.
Don't call all your friends and family or blast all over social media the fact that you won, because then you're gonna have everyone coming after your money.
Ain't no way I'm gonna let this money compromise our friendship.
Third, get some advice. A financial advisor, a lawyer, a tax accountant, all people to make sure you're taking care of those winnings. I don't know if I broke the rules, but it says $30,000. You don't have to claim the prize right away, and in some states, you don't even have to identify yourself. I'm walking in there with a paper bag on my face. Now, there are 2 ways to collect your cash. Take the annuity, where you get paid the jackpot in installments over the course of 29 years. Or take the lump sum and get the money right away. But if you...
So, of course, and it's just to summarize everything, because I'm not about to finish this whole clip, because he's going to, just basically talk about what happens if you win. But he basically saying, in order to solidify your winnings, you have to sign it and you have to report it, and you can report anonymously, and you can accept a big lump sum, or you can accept it over 29 years or whatever. And all of that is, of course, if you actually win the lottery, which is like 300 million ifs, as we just heard previously. So, with all of that being said, it's obviously one of the biggest risks you could possibly take. Not risky as in you losing a lot of money, but it's risk as in just factor. Like, there's no way in telling that it would actually work out or not. So, of course, it's not very expensive. Lottery tickets are only $1. However, if it compounds, if you get a lottery ticket once a week, 52 weeks in a year, $52. You try the lottery for 5 years, 52 times 5. I don't know the exact number, but that's well over $250. So all of that being said, and I believe it's like 260. You can check my math, but I believe it's like 260.
If the number's right, we're going to take flight.
All of that being said, is it really worth it? Is it really worth it? Is it really worth it to just give yourself false hope? And once you, see that as really false hope, because that's all it really is, and then it's really a tax, as we just learned from the history of the lottery, its history comes from just being a tax, then, we'll likely be less willing to actually see the lottery as a way out, I guess you could say. And once we kind of get past that, we can kind of move into more effective lanes of investing our money. Now, before we go into more effective lanes, I actually do have a sort of kind of ineffective lane, I guess you could say. And that lane is talking about the casino, right? So I'm sure y'all all heard of casinos, different things like that. Coming from New Orleans, they got casinos everywhere, like truck stops. You got casino. Man, look, you go into a gas station and they got machines, bro. They got machines everywhere. I mean, hell, even bingo. I meant to say bingo in a sense is, a watered down casino. So, I definitely want us to kind of take a little bit look at how casinos make money from us. And this clip is actually going to be coming from the YouTube show Infographic Show. And of course, I'm going to give everyone their credits in the show notes if you guys want to learn more a little bit about it.
And just concentrate on the gambling. The casino always has a statistical edge. Otherwise, you wouldn't be gambling. This is called the house edge. If you look at something like a slot machine, while one person might win big and only place a small bet, the machine in the end has a rate of what it pays out. This is often a payout rate of about 90%. It will always keep some money for itself.
So they're basically saying that whatever you put in, the machine kind of has a payout rate of 90% of that. And that's kind of to make sure that they get some form of earnings. And that's basically the normal of what you would hit. The normal of what you would hit is about 90% of what you put in.
Simple. What is happening to our brains is less simple. It's proven that gamblers play faster when they've been losing because they are expecting that one big win to come. What these slot machines do to make us keep playing is keep offering us what are called near misses. While it's irrational, the player sees this as almost winning.
So you get a lot of near misses, basically, and your brain computes that as almost winning. And I mean, you can take this out of the casino aspect. You can take this really into anything in life. When you feel like you're close and you feel like you're almost there, you're going to want to keep continuing. That's just how the brain works. And that's really what casinos does its best at, is playing on that almost there, almost winning aspect of your brain. And yeah, it kind of pretty much extorts it in a sense.
Dopamine rush and play on. Science tells us that what happens in our brains with these near misses is almost the same as what happens when we actually win. It's exciting after all, until it's depressing and your pockets are empty. We are told that these machines are designed in a way to give small wins often, and this makes the player feel as though they are winning. Lights will flash during these wins, music will play, and the player ends up thinking something good has happened. The machine payouts are based on thousands, if not millions of spins, so don't go thinking just because some poor dude lost a fortune, you will do any better. Conclusion, slot machines, like cell phones, are made to addict you, and they always get their percentage. If you haven't hacked them, that is, something that has happened numerous times in the past. Let's move on to roulette. Okay.
So, of course, they are meant to be addicting. They are meant to addict you to, of course, the machine, basically, like he was just saying, the quote unquote reward system that a slot machine would offer with its bells and whistles and of course the little confetti and all, basically making you feel like an absolute winner, right? And of course the phone, if you want to take it to say social media, kind of does the same thing. If you look at Twitter, what do y'all think? Retweets, likes, quotes. What do y'all think on Instagram? Likes, comments, shares, all of these different type of things. When you get that, you get something so beautiful, just so beautiful, that Instagram and Twitter sends you called a notification. And that notification, what does it do to you? That's right. It diverts attention, it brings attention, and it keeps you where you are on their app. Just like the casino keeps you where you are in that seat right in front of the machine. And that's basically how the casino pretty much takes money from us. And, as we basically heard earlier on, they have a payout rate of 90%. So 90% of the time, 90% of what you put in would actually be what you would make on a normal basis from playing, say, slot machines. So basically, if you was to put in, I don't know, like $100 and you did that 10 times, likely all 10 of those times you got about $90 back. losing $10 each of those times. After 10 times 10 is 100, obviously. So, over time, that's kind of how you lose money. Of course, if you hit, say, a jackpot, or if you hit certain things where you make money out of it, that's the rush that they're talking about. And it's basically like, okay, well, I did that after trying 10 times. I finally got my money back. Maybe I should keep trying to get a little bit more money because I finally got a little bit of something. And that's kind of what he was just mentioning earlier on. You're almost there. You're almost winning. And that's kind of what they play on. So, you kind of have to really be careful, of course, when dealing with the casino, because that shit will flatline you. That motherfucker will leave you broke. That motherfucker will leave you without hope. And that motherfucker, that shit will just leave you very, very high and dry, bro. So you definitely need to be careful of them casinos and the slot machines and basically all of that shit that comes with it, right? And I mean, again, if you're feeling like you need to upgrade your money situation, you need to go about the business of, just raising what you're trying to do with your finances. Then the two first mentioned things, I'll say the casino and, of course, the lottery, those two risk-taking things may not be the best bet if, of course, you're a risk taker, right? The reason being is because you have something out there that's also a risk, but the chances of you actually losing the money that you put in compared to the chances of you actually making a profit, so much different compared to, of course, the lottery and the casino. And that entity I'm talking about is the stock market. So I'm sure, most of y'all have heard of the stock market. I'm sure you've heard of how the stock market works. And of course, I'm sure you've heard of how the stock market can lose you money. However, what we're going to go into is basically the type of risk associated with the stock market. And before we go into that, I just want to really give y'all a little bit of an open account of my experience with the stock market. And I'll just give y'all an account pretty much since let's just say the last 3 months, right? So over the last 3 months, I've been getting into options trading. I've been getting into, I've kind of been crypto trading. And then, of course, I've just been buying and selling shares, of course, on the stock market. But I've taken it very serious over the past 3 months. And I've basically educated myself every single day. I'll read, I'll do something that'll further my education and compound my education every day. That way I make sure I'm mitigating the risk that I'm taking. And that's something big that you definitely want to do before you push money into anything. You want to give yourself proper self-education. That way you can actually mitigate risk and lower the risk of anything that you may be doing. And I definitely recommend that for you guys also. And I'll say this, while I have made some gains, I have made and gotten some losses. And that's because the stock market is a tricky motherfucker. And by that, I mean, it's really no telling when it goes up or down. However, you only lose money. And this is what I mentioned earlier on. You only lose money if you sell while you're in the red. If you hold while you're in the red, and it's a stock that you believed in, and before you actually invest in it, you should do your research on that stock and you should make sure that you believe in it. If it's something that you actually believe in, then guess what? It's going to bounce back because you did your research and you made sure that it's actually something and this is what I do even if I'm investing for the short term, I make sure that stock has at least some type of long-term aspirations. That way, if it doesn't work out, with my expectations in the short term and I wound up losing money and going in the red, long term, it should bounce back. And it eventually I would at least make back what I put in, and I can take that out later on down the line. And that's kind of where patience comes into, and also just being a savvy investor. So, of course, like I was mentioning, not selling while it's in the red, and also taking advantage of opportunities while it's in the red. So if it's a stock that you definitely believe in, and say you put, I don't know, $750 into it, it went down and now it's at 700. It doesn't necessarily mean that you lost $50 because you can actually, get that $50 back if you hold and the stock goes back up. What I normally do is I average down, which basically means if I initially put in 750 and it's at 700, I'll put in even more money, called quote unquote buying a dip. So basically, of course, I'll buy whatever dip it's currently going on. So if it's, like in this instance, a $50 dip, I'll go ahead and put more money into, average down. That way my average is now, instead of it being 750 of me, of the cost for that stock, it'll go down to say 725. And by that, I mean, each of those shares is now at $725 per share. That's how much it cost me on average to buy that particular stock. And I know this is extremely technical, and unless you kind of trade it before, it may actually be very difficult to understand. But with all of that being said, I'm just trying to give you guys a very personal perspective as to how I kind of navigated throughout the stock market over the last 3 months and was able to just pretty much account for everything that I lost and kind of still am getting gains to this day. And of course, still learning to this day. So, I definitely do feel like if you're taking a loss or if you're taking risk and it turns into a loss, don't panic. Believe in what you bought. And if you can, continue to buy, because once it goes back up, you'll now have more of that stock at a discounted rate than what you originally brought it for. So that's kind of the benefits of quote unquote averaging down and buying the dip when your stock loses you money. And, of course, you just have to make sure that it's something that's wise to support. You have to make sure that it's something that, like I said, has a little bit of a long-term aspiration and a little bit of a long-term gain. That way, again, if you lose money, you're able to get it back. So it's really just all in how you choose to support certain things and thinking about how you choose to support certain things and considering, of course, how much you choose to support certain things. Just like, of course, you can support this show, the ShiftMakers podcast. And of course, that can be done in a few different ways. First and foremost, we definitely do consider and love to hear feedback from people. I mean, if you definitely want to go about the business of leaving some feedback, we definitely do appreciate that. That can be done, of course, through the YouTube comments. If you want to tweet us, you can follow us at the ShiftMakers, of course. You can also follow us on Instagram at the ShiftMakers. Definitely do that. Leave us some messages. Communicate with us. Definitely be a part of the conversation and a part of the community. Let us know what you like. Let us know what you didn't like. Another way of supporting us, just listening all the way through. I mean, that is extremely helpful to us, extremely beneficial to us. Of course, leaving a review, telling somebody else what you heard, putting somebody else onto the show, because if you got value from it, then goddamn, maybe somebody else could get some value from it. So that's extremely helpful to us. And last, but certainly not least, you already know, baby. You already know we accepting them donations. So if you want to go about the business of leaving a donation, that can be done by just clicking on our episode notes, clicking on the show notes, clicking on the show details.
Donate!
And we have a PayPal link. We also have a Venmo link. And I mean, however you see the show as valuable. If you see it as $1 worth of value, you see it as $5 worth of value. If you see it as a band, you heard me, a quick little band of 1,000. If you want to send that our way, we definitely appreciate either one. And of course, all of those are excellent ways of supporting the podcast, supporting the show. We are presented by KRUE Clothing, KRUE Clothing.com. Message us at info@KRUEClothing.com. Again, that is KRUE Clothing. Kings remain unified eternally. With all that being said, thank you for supporting the show, and back to the show. So, of course, we were getting into stocks and, just the different type of benefits and the risk mitigation that comes with stocks. And I want to bring it back to basically how can a stock lose us money? Because, of course, there's all types of benefits when it comes to investing in the stock market. Of course, you can definitely get some great profits from that. But first and foremost, let's actually talk about and discuss how can a stock lose us some money, right? And for that, we actually going to be going to this YouTube show called The Clay Trader. And of course, be giving him his credit in the notes.
But you bought it for $25. If the market's only willing to pay $20 for it, then that would be, 25 minus 20 equals $5. But of course it's down, so you put a negative right there. That means you are now losing $5. You put $25 into the market, but the market is telling you, and that wasn't the best choice because now it's only worth 20. Who says it's worth 20? Well, the market. If people are only willing to pay $20 for it, by definition, that's what it's worth, right? Worth is only what somebody's willing to pay. And if the market's only willing to pay 20, well, then now you're losing $5. So let's take it to the
So it basically works off supply and demand. So basically, you own a certain amount of shares. The market, again, the people who's demanding those shares, they want to pay for it, right? So you're trying to sell it. If you want to sell it, of course, you want to sell those shares, as he was just mentioning. Let's just bring it back to the $25 example. You brought it for $25 per share. However, the people that's in demand, they want to buy it only for $20. Then guess what? The worth of that stock is worth $20 because the value of something is only worth what someone is willing to buy for it. So basically, if you would like to sell that particular share of that stock, even though you paid $25 for it and someone is only willing to buy it for 20, if you're willing to sell it for 20, then you sell it, but you will be losing $5, of course. And that is how you would lose money in the stock market. Again, supply and demand. And it goes the other way around, of course. If the supply for that stock is extremely, extremely high and the demand is pretty low, which is what the scenario we was just naming, then, of course, the people who's in demand, they kind of have control over the stock price. So those are the people who basically dictate the buyer basically dictates the stock price, which is that exact scenario. Now, the other way around is if there's a very low supply of that stock, which is what we call market cap. If there's a low supply of that stock and the demand is very, 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 very high, which is kind of what we're seeing with Bitcoin. So, and of course, Bitcoin is a crypto, not a stock. But the Bitcoin demand is extremely high, but the supply of Bitcoin isn't that high. It's very high, but it isn't that high compared to the actual demand, which is why the price of Bitcoin is so high. Because the people who's willing to buy it is willing to pay that much money for it. So, yeah, basic economics. Well, yeah.
The drastic end. What happens if nobody out here, nobody wants to even touch it at all? That means people are willing to pay what? If nobody's willing to pay anything, then, well, that would be zero. Meaning you have lost how much? If you bought it for 25 and nobody wants to buy it from you, then what is that known as? Well, that would be known as worthless. Worthless numerically is known as, well, being worth $0, meaning you have lost all $25. Now, does this happen often? No. If you're talking with penny stocks and stuff like that, yeah, this could happen. But
so yeah, like rarely does a stock go all the way down to zero because there's always normally going to be a demand for that stock. And of course, as the demand goes up, the price of it normally goes up. So rarely does that ever happen. And normally it happens with penny stocks. So normally those stocks that's worth less than $1, does that happen? So if it's worth less than $1, then it's normally on its way to zero anyway.
Times you'll be able to sell it, but sometimes, and it's going to be, you're just selling it worth or for less than what you bought it for, hence a loss. That's how a stock will lose you money and does lose you money, because you got to make sure that as soon as you buy it, the idea is eventually somebody else in the market is going to be willing to buy it for you at a higher price. that doesn't always happen. Now that's why that's where the strategy comes in. Maybe think,
and of course, as you were just mentioning, you have to have strategy. You have to have a strategy, which is, as I was just mentioning early on, part of it is doing your proper research. Part of it is figuring out, okay, I'm going to sell. If I'm going to buy this stock at, let's just go to back to his example. If I want to buy this stock at $25, I'm going to sell it probably at a 50% gain if I'm expecting it to go to 50%. If I'm expecting it to go up 50%, that may take years. If you're trading options, that may take hours. If you're, it just depends on what you're trading. Stock options is a completely different thing, not to confuse y'all. It has to do with buying calls and buying puts, basically shorts. And if you're expecting the stock to go up, which is a call. But yeah, I digress with that. Basically, all I'm saying is, with your stock, when you go into actually buying regular stocks, you have to have a proper strategy before you buy anything. You have to really figure out and stick to when you're going to sell it, when you're going to buy it. Me personally, I only buy stocks normally. I want to say only, but I normally only buy stocks when they're in the red, when they're dipping. That way, because if it's in a dip, it's normally going to go right back up. So that's kind of how I can guarantee a profit in a sense, depending on, of course, the stock. And same thing with crypto. So right now, as I was just mentioning, crypto is in shits. It's in shambles compared to where it was 2 weeks ago. So if you have some money to the side, I would definitely recommend. And of course, I'm not a financial advisor, so I'm not about to tell you what to do with your money. Don't listen to me. But I would recommend you're going about the business of maybe looking at some crypto to invest in, because it's for a very significant discounted price right now. And once it goes back up, you can make some decent money. But yeah, that's definitely, just a wise investment, I feel like, to make. And really a wise thing to do is just have a strategy with your investment. So with all that being said, since we talked about the lottery, we talked about the stock market, we talked about the casino, I want to ask you guys, which one seems like a wiser investment with the best return on investment, ROI? Which one just seems wiser? The lottery, the stock market, the casino? I mean, I know it's a pretty rhetorical question, because it's obvious that the stock market is a much wiser investment, or crypto market. However, they all come with very significant amounts of risk. And once, just bringing it back to what we were mentioning when we first started off the show, talking about how people were mad at Elon because they lost, money because they decided to panic sell, even though they accepted the risk when they initially bought the crypto in the first place. You can't be mad at you can't be mad at someone for your own decisions. And that's kind of why I wanted to really do this whole episode, is to kind of preach that, take risk, invest in yourself, but do not be mad at anyone with your decisions, because at the end of the day, you're doing this for you. You're not doing this for me. Well, of course, if you're supporting me, I'll definitely appreciate that. But, you're not investing, I'll say. You're not investing in the stock market. For me, you're doing this for yourself. You're doing this for your legacy. You're doing this for your family, hopefully, of course. But, you want to definitely be accepting of what comes with it. Because once you accept what comes with it, and once you accept the risk that comes with it, then that's when you become a strong investor. That's when you become really a smart and strategic investor, because now you're not, say, scared to actually take the chance of investing on a very strong stock with high chances of profit. And you also won't be angry or mad once you see your stock go in the red, if that ever happens, because of course, the stock market, like I said, there's no way of guessing that. So, I don't want to say if, there will be a time. Again, stocks go up and down. So there will be a time when you see a stock go in the red. But once you, accept the risk that comes with it, you'll be less likely to sell once it's in the red and lose your money. Now, of course, if it's in the red and it just stays in the red for a long time, then maybe you may want to consider selling because, maybe that stock is just a dying stock. But for the most part, if it's something that you did your research on, you had a proper strategy, and it's something that you fully believe and have hope in, then you really shouldn't be selling while it's in the red because, again, you should be buying a dip, which is basically a discounted price on something that you already believed in, and wait for it to bounce back, and then get all of the money and profit that you invested in. So with all of that being said, my final and last question: what is holding us back from taking a risk and starting to full on invest? What's holding us back? Is it our family? Is it our people? Is it our finances? Is it we spending our money on? Is it bullshit that we spending money on? Is it, significant other? Is it, just really consider what is holding us back from taking the risk. Is it maybe us not understanding? Maybe us not having enough information on shit? Because if that's the case, the internet is a very, very beautiful place, my friends. Google is a very beautiful place. YouTube is an exquisite motherfucker. So definitely go about the business of educating yourself, because there's a lot of money to be made, especially in 2021. And, just stop holding yourself back from receiving a blessing. And with all of that being said, I appreciate your support. We presented by KRUE Clothing, KRUE Clothing. Of course, if you want to go about the business of supporting KRUE Clothing, that can be done at KRUEclothing.com. We are live from Color Command Creative Studio out here in Atlanta, Georgia. Again, Color Command is a studio that is absolutely amazing at branding and also bringing value to your brand. So if you know someone that may need some value brought to their brand, if you know maybe someone that may need a refresh or rebrand, or someone that just may need a little bit of help with their startup or their company and the strategy behind it, to basically, again, help out with the profits, help out with the revenue, help out with the team building, help out with the network, help out with the connections, then of course, feel free to message Color Command. That can be done just by looking at the show notes. I'll leave something in the show notes right there for you so you can communicate and network with Color Command. Again, help yourself out, help your friends out. And I appreciate you supporting the show. Remember to leave them donations. Remember to leave that feedback.
Value, and value. Oh, we need that.
I definitely appreciate you listening all the way through. Episode 12 of the ShiftMakers podcast. I'm your host, Elder Designer. Thank you for your support.